right, guys, I got a spooky story for you. If you're an out-of-state investor with not a lot of liquidity and a lot of money tied up in a rental property that you own and you're still looking to do deals, well, follow me into the light and I'll show you the right strategy you can do to do more deals. As we step into the light here, John Quarles is an out-of-state investor out of Denver, Colorado. We are in Montgomery, Alabama, in a house that he just closed quickly on using the right wholesalers, the right funding team, and the right contractors to move quickly. He used a free and clear rental property he has here locally in Montgomery that we collateralized to fund this project he just closed on. If you are thinking about, hey, like I don't have any money to do a deal, or I need to get a partner to do a deal, no, there's another strategy. If you have another piece of collateral, free and clear or high equity in it, we can use that as collateral to fund a flip project for you. Don't stay in the dark, move into the light, and know the right strategy you need to use when flipping a project. So he just closed on this last week quickly, using the right team, the right funding partner, and the right strategy to do more deals. All right, so we are rolling up on John's rental property that has funded this entire deal. It's currently rented, so we're not going to go in. We're going to respect the tenant's privacy. This is the engine that has afforded John to do a lot of properties, including the two that we just saw. And so, again, it's important to factor in different strategies as you're flipping. And we were talking earlier because Brady is trying to get a HELOC on his rental property, and it's very difficult. Usually banks don't do lines of credit on investment properties. It's possible, but it's very difficult, like even more difficult than just a 30-year bank loan. However, we can fund deals based on your rental properties. And so, again, it's just an awesome strategy to use.
Yeah, and one of the cool things, I'm going to say it's the triple threat, but it might even be more than that. So here you've got a fully renovated, stabilized house that John had a bunch of cash that he could have just sat there and it could have been eaten up by inflation.
Mm-hmm.
So he didn't want that. He placed it into a property. So now he's not getting hit by that. In fact, he's gaining from that same inflation in the terms of rent prices going up. He's getting appreciation on the real estate itself. And then he's getting a tax shield from having a depreciating asset. And then kind of what we're talking about here is he's now tapped into that formerly dead equity to go and to roll that into other investment properties.
Yeah.
So he's making his certain amount of dollars spent around a lot of times, and his velocity to money is moving incredibly fast.
Yeah, that's right. So we wrap up here. To boil that all down is equity is only powerful if you use it. So use it wisely and use it.
Hey, Tanner here again, showing you what the finished product looks like. This is the same investor, same city, just a different house. But this is how you take one piece of collateral and you roll it into multiple projects. And this is the end result of it. We've got a stabilized asset here that somebody's gonna love to call their home.